Stavros Tousios for M4Markets. Today we're going to have a quick look on euro dollar and also pound dollar. Euro dollar has started to fall the beginning of February. We have identified this 5-wave leg to the downside, guys, now, and we'll have re-enter the base trend, which means, of course, that there is no acceleration to the upside any longer in the medium term, I would say. Now, we did see this divergence, right? And now currently we see a very small divergence popping through on the shorter sort of time frames, or the sort of time span, I would say, not time frames. At the same time, we see a larger hidden bearish bullish divergence from this low to low and versus this low to low over here, right? So we'll have a double signal. One is hidden divergence to the upside, and one is a typical divergence to the upside, which suggests, right, because we've actually moved it down in 5 waves, suggests that we're going to probably see a 3-wave move to the upside as a correction, like a pullback, and from there probably continue lower down closer to the 102.2879 or so. Of course, we need to first take the 104.68 into consideration, and well, most importantly, break below the 106.9 decisively. Now, for now, in the shorter term, okay, we have to pay attention to whether, you know, we can start indeed moving to the upside, and if this is of course the low, because maybe we're going to get another leg to the downside. By the way it looks so far, it could be a done case. So we should be looking for something like of an ABC here, right? Like some sort of correction here. Now, if we do go higher up, you know, we need to see what's going to happen around 108. It seems to be a swing low from the January 31st move, and also near the 107.9 spike that we saw on February 9. The main trend here is to the downside, okay? The short-term trend, though, remains upward because we are expecting somewhat of a correction to take place. But we could perhaps just do this and try to see when we could perhaps have an attempt again outside that trend, right? It won't necessarily mean that the trends will accelerate again. It would probably just be a false break. Of course, you know, if we keep breaking the resistance levels to the upside, that also could be something that we have to remain focused on whether we actually get a reversal to the upside rather than anything else. Now, when we look at the pound, last time we looked at the pound, we talked about that a potential leg to the upside for a rejection, and we actually came exactly at this swing low, and we rejected prices, and then we started falling lower again. Now, on the pound, we also see a hidden bullish divergence popping here, but there is no other signal, okay, for the time being at least. So this rejection will probably, and it's more likely to offer one leg to the downside before we could potentially see another signal. And by the distance that we currently see between momentum and prices from the previous lows, doing something like this, yes, it's probably going to give us another hidden bullish divergence signal. So there is, of course, a swing low at 1960 here that we'll have to cross below. But there is high potential that we are going to do that and go and find next support at around 118. This is the previous swing low over here, right? So, and given, of course, the rejection, you know, there is kind of increased chances that this can take place. But if we go down on the 1 hour, we are also going to see that it's a little bit more clear that we actually have or need to do one more leg to the downside over here, right? So we have to kind of see this. Otherwise, that would imply that this is just going to be a correction. And we started another leg to the upside. But personally, and you know, due to the structure that we see also that taking place, it doesn't look much possible. So we did an attempt at the 50, we failed, fell below 38, below 23, and currently it looks like we might be in some sort of consolidation phase, guys. So maybe this is going to turn into some sort of triangle, then we'll go up, then correct, and then follow again with another leg to the downside. So the barriers that we need to think for now is the 119.57 and then 121.89.90.